Well, our next guest is still finding some pockets of opportunity within the sector. Mish is Managing Director at Market Gauge Group, and she joins us this morning. Nice to see you.
Hey, how you doing, John?
I'm doing well. I guess let's start for anyone who's waking up this morning. Maybe they saw a headline around Meta, but they're now seeing that stock down another 20% in the pre-market after it's already dropped more than 60% this year. What's your general observation on the market reaction to that California giant?
Not surprising. You know, what's so interesting is obviously we know that they had some financial issues and made some bad decisions. User traffic was actually up a little bit in terms of the Facebook space. But what public perception of the head of the company has a factor. It's almost like the opposite of Musk. Musk, when he comes out and says negative things about his company, the stock still winds up either finding a wall of support and rallying, or something around him, you know, like Twitter, becomes the headline, and, you know, Musk can do no wrong in essence. And with Zuckerberg, it's just the opposite. He has fallen out of favor for a long time now. So if you step back and you just look at the actual company, what they're making a bet on is the future with metaverse and marketing, which probably is the future. The question is the future going to happen in a year, 5 years, and what is that stock going to do? So we're watching it down here. It seems, I hate to use the word cheap, but if it can hold somewhere between 95 and 100 and establish somewhat of a base and get to 100, I don't know, I might, with a very tight stop, get involved, but I'm not rushing, let's put it that way.
Well, I mean, you raised some excellent points there because, you know, on paper, this is a cash machine, and I think as the stock was under pressure, a lot of people said, you know, a lot of that worrisome consideration is factored in, but when you've got a founder who is dead set on getting the company ready for the future, obviously that costs a lot of money. You could argue that, you know, for the faceless companies, and there are hundreds and hundreds that we cover here, you really don't know as much about what's happening behind the scenes. They might pay lip service to Wall Street, but you never know. But this one is a very high profile one, and for now investors are going to sell and ask questions later. Within technology, though, it's not an area that you're entirely avoiding. In other words, you know, this idea that stocks go down a lot and then they could continue to go down more. Yes, that's always a possibility, but there are some hard hit technology stocks that you're giving a second look these days.
Well, I'm always very interested in Microsoft. It's a solid company. The question is, after its earnings reports and some of the things that it talked about as well, obviously there's issues all over in terms of just demand, advertising space, even with cloud computing. You wonder where is the bottom in something like that when we have a completely new environment, right? We now have higher interest rates and higher inflation. These companies partly did very well because of that. So I would take that maybe as the best barometer. So we went down to about 225. This was before the earnings. Rallied to 250, and now it's settling somewhere around 230 to 235. So I keep an eye on it. Again, I wouldn't rush into tech at this point because our issues are not over. We know that ECB raised today. We know our Fed meeting's coming up. We know we still have inflation problems, and we have a Fed that's reactive, not proactive. So their monetary policy right now is whatever the flavor of the month is going to be. And right now they're going to look at GDP and they're going to go, oh, we're not going into a recession. We're okay. We can continue to fight inflation.
Okay, I want to go through some individual names as well. We're showing our audience Microsoft. That stock was under pressure this week on cloud concerns, but obviously these companies have a lot of ways or wiggle room to appease investors in the short term. Meanwhile, just looking at your investing strategy ideas on this Thursday, you have a number of companies in tech, Palantir and Roblox among them. Is there anything that stands out with those names in particular?
Well, Palantir, mostly because they have contracts with the government and in big data, and they have a really good risk reward. I mean, at this point, John, we're really all about finding the companies that we can make some kind of an argument for fundamentally, but more importantly, we have a point on the technical charts that tells us when we're wrong without it being very costly with some upside room, and Palantir fits that bill. We've been in and out of that stock. We've been long now since $8, and it's coming in at around $8.66. Obviously, if we can get a dollar rally from here before it reports, which I think is like November 8th, we'll take some profit, decide if to hold into earnings. That's how we're looking at things right now, very short term.